What's the best stock to buy? Amazon, Mercado Libre, or Costco? I'm going to answer that question in this video comparing the three stocks across four metrics. So let's begin. The first thing I'm going to look at is revenue growth. Looking at this metric, we can see Mercado Libre significantly ahead of both Amazon and Costco. Revenue growth of 49% in its most recent fiscal year. That's still ahead of the other two, Costco and Amazon, and it's been that way for several years now. Where Mercado Libre, actually, it's quite funny because Mercado Libre is sometimes called the Amazon of Latin America, and so the fact that it's ahead of Amazon is interesting. Speaking of being ahead of Amazon, the e-commerce industry is expected to grow much faster in Latin America than it is in the US over the next several years. So not only is Mercado Libre have been ahead for the last several years in terms of revenue growth, it's likely to remain that way over the next several years. And in terms of revenue growth, Costco will be trailing these two, Amazon and Mercado Libre, just because of the nature of its business. It's more emphasis is more on brick and mortar sales, physical stores, physical warehouses. So revenue growth is not Costco's specialty. The next metric I wanted to compare these three companies on is cash flow from operations to sales. This measures how good it is in turning sales into cash flow from operations. And if you've been following me, you know it's one of the metrics that I consider to be very important. And looking at this, again, Mercado Libre ahead of the others at 27.9% most recently in its most recent trailing 12 months, and that trending upward. Meanwhile, Amazon trending downward at 9.1%, and Costco holding consistent at 4.01%. So Mercado Libre at multiples better than the other two in this metric. The next thing I wanted to look at is operating profit margin. And again, Mercado Libre ahead of the others at 9.81% in its most recent trailing 12 months and trending upward after a huge downward move. And then we have Costco at 3.39% and Amazon at 2.38%. Costco, in fact, hasn't had an operating profit margin over 4% in the last decade. It's consistently low, and that's in Costco's business model. It prefers to sell things and be less profitable because it aims to have very high customer loyalty and it wants to turn over sales rapidly. So it wants to make less profit per year per item, but it wants to get more and more and more and more customers coming back more and more and more often. So it wants to sell things at lower margins, but to keep you coming back and buying more and more and more. Amazon is not intentionally operating at lower profit margins. It's just that it's so expensive for Amazon to run its business. It offers fast and free shipping on millions of items, and it's just so expensive to do that, right? Sometimes I buy some toothpaste for the kids and it costs less than $3. Amazon delivers that to my doorstep for free. I don't know how much money it loses on those kinds of orders because it probably costs more to deliver that item than the item itself costs, let alone the fact that Amazon does not own that item and it's going to lose money. It's barely making a profit margin in the 15 cents or 20 cents. It's just very expensive, difficult for it to earn sustainably high profit margins in that business unless it just grows to such a large capacity. I don't even know how large it needs to be to generate healthy profit margins. It's already got sales over $500 billion. How much larger can it grow? That remains to be seen. Maybe it's just going to be a very small operating margin business and it's just going to rely on the fact that it's got hundreds and hundreds of billions of dollars in sales, and so it's still going to make very good total profits even though the profit margins will be small. So finally, I wanted to compare these three stocks on their valuation. I chose to use the price to free cash flow and the price to earnings. Measuring by the price to free cash flow, Amazon is very expensive at $239, and then Costco at $39, and Mercado Libre is the cheapest at $24 according to this metric. According to the forward price to earnings, Mercado Libre is the most expensive at $70, and then it's Amazon at $67, and then it's Costco at $33. So the difference between the price to earnings and price to free cash flow could be a significant amount of non-cash expenses that differs between the companies. You think of non-cash expenses, the two biggest category of non-cash expense are depreciation and amortization and stock-based compensation. So depending on the degree of which the companies use those categories, it will be a bigger difference. Costco doesn't use a great degree of those, and that's why you see similar valuation in Costco, whether you look at price to free cash flow or price to earnings. Nevertheless, to answer the question, which one of these three is the best stock to buy, I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. I would go with Mercado Libre because it's performing so much better than the other two on the critical metrics of operating profit margin, price to free cash flow from operations to sales, and revenue growth. So because of that, and the fact that it's not that much more expensive when you look at a blended average of the two valuation metrics that I've highlighted here, I would feel comfortable choosing Mercado Libre as the best one of these three stocks to buy right now. All right, that's all I've got for this video. Thank you so much for watching. I've picked some videos that I think you'll enjoy that are popping up on your screen right now. So please click one of those and I'll see you over there.